Hello, and welcome to this video on incomplete records with goods for own use. It's taken from the Osborne books AQA A-Level Accounting Part 2. It's in Chapter 2, and it's question number 2.16. So we've got Samantha. She owns a kitchenware shop called Sam's Trading. She does not keep proper books of accounts and asks you for help in preparing her financial statements for the year ended the 31st of December 2016. And we're given the following information, and it's for the year ended 31st December 2016. We got the 1st of January, so that's going to be the start of the year, to be opening balances. And then the 31st of December, at the end of the year, with the closing balances. So your short figures at carrying amount. Now, carrying amount is the difference between the cost and the cumulative depreciation. It's also known as a net book value. So at the 1st of January, start of the year, the balance was 18,240. At the end of the year, it was 14,360. Inventory, 1st of January, it would be your opening inventory, it's 32,170. And the 31st of December, at the end of the year, is the closing inventory of £35,470. Trade payables, the amount you owe to your credit suppliers. At the beginning of the year was £14,560, and at the end of the year it was £16,830. We've got other payables. That's also known as accrual of expenses. Here we've got for rent of shop premises. We didn't owe anything at the 1st of January, but at the end of the year we owed £1,230. Other receivables, also known as like prepayment of expenses. We've got the rent of shop premises. At the 1st of January, it was a prepayment of £806, and at the end of the year, there was no prepayment at all. Now, we've got a bank statement. Now, this is like a summary of the transactions in the year. First thing you need to be aware of, the bank statement, the columns here, when you've got debit and credit, are the opposite way around to the nominal ledger of the T account for the bank account. So the money going in on the bank statement is on the credit side, and the money going out on the bank statement is on the debit side. Final column is balance. If you've got CR at the end, that means we've got money in the bank account. So on the 1st of January, the balance was £1,270, whereas at the end of December, 30th of December, the balance was £4,410. Now, we'll use the transactions in a few moments in our question. Samantha provides you with the following additional information. All purchases are made on credit, so in other words, there's no cash purchases, and all sales are cash sales, so there's no credit sales. Samantha's policy is to have a markup on all goods sold of 40%. At the 31st of December 2016, there are unpresented checks sent to trade payables of £1,590. What that means is they've sent checks to the suppliers, but they've not yet been processed on a bank statement. Likewise, you've got amounts for cash takers paid into the bank, but not yet credited of £1,220. So you've got cash takers put into the bank, but it does not yet appear on the bank statement. The shop fittings sold during the year had a carrying amount of £1,250 at the beginning of the year, and there were no new shop fittings that have been purchased during the year. And finally, during 2016, Samantha has taken goods for her own use, but does not know what the amount actually is. Now, we've got a few things to find out here. We've got 6 different tasks. First one's A. We've got to calculate the purchase for 2016. B. Calculate the rent of shop premises for 2016. C. Calculate the depreciation of shop fittings for 2016. And D. Calculate the profit loss on sale of shop fittings. Then we have the 2 major parts now. Part E. Prepare the business income statement for the year ended 31st December 2016, showing clearly the value of goods taken for our own use by Samantha. And finally, Part F, prepare the business's statement of financial position as of the 31st December 2016. Right, so we're going to go through each part individually now. Right, purchase for the year is going to require a purchase ledger control account. Now, the 1st of January, the balance brought down is in the beginning of the question. So I go to the top of the question, balance brought down for purchase of the control account is our trade payables. So the information at the beginning of the question, we've got trade payables is £14,560. So that's our balance brought down. The amount paid to our trade payables, again, we go to the bank statement now. So payments of trade payables is £180,890. I've got to remember, we also had unpresented checks to trade payables. That was in the information, and that was £1,590. The balance carried down, we're told it in the question, that's the balance on the 31st of December 2016. So go back to the initial information. I went trade payables, 31st of December is £16,830. Now, the missing figure is going to be our credit purchases. Now, the largest total is going to be on our debit side. That's going to come to 199,310. The credit side must be the same for our T accounts. Therefore, our missing figure is going to be our credit purchases, and it will be 199,310. Take away £14,560, which gives us £184,750. Now, to complete my T account or nominal ledger account, we've got a balance carried down. On the next day, got a balance brought down on the opposite side, and the amount will be the same as the carried down figure, £16,830. And the answer to work at the purchases for the year, so put purchases for the year equals, is going to be £184,750. So that's our purchases for the year. Remember, there's no cash purchases, so it's going to be purely our credit purchases. Right, rent a shop premises now. So again, I've done the T account for us. I've got balance brought down. So let's go to my initial balances at the beginning of the year. Balance brought down on the rent account. So shop rent, balance brought down. 1st of January, I've got £860 here. Other receivables. Other receivables, it's an asset, so it's on the debit side. It's £860. Now, we made some payments by bank for our shop rent. So I'm going to go to the bank statement, look up the payments for shop rent. Got £20,840. The balance carried down. Back to the initial information. Other payables, rent a shop premises at the end of the year was £1,230 outstanding. So it's going to increase the rent amount. So it's going to be on my debit side to carry down. So we've got nothing on the credit side at the moment. So our balancing figure here would be the rent for the shop premises in the income statement. So I'm going to total my debit side. It comes to £22,930. My credit side must be the same. Therefore, the missing figure for income statement for rent to shop premises will be £22,930. Again, my balance brought down will be the same as my balance carried down. Just to finish off the T account, it's £1,230. They've asked the rent to shop premises, so I'm going to put it down underneath. So the rent to shop premises was £22,930. Right, part C, when depreciation of shop fittings. So we've got no information in the question about depreciation policies, if it's a reduced and balance or straight line method. So we prepare what's called a shop fittings carrying amount account. Now my balance brought down, again, this can be the initial information for shop fittings, the balance on the 1st of January. So I'll go back to the top of the question. Shop fittings carrying amount was £18,240. So that's my balance brought down. Now, we were told in the question, in the information, that it's sold from shop fittings with a carrying amount. So we're going to exclude that now. It's going to the credit side. And the amount was, I'll go back to the information. Here we go. They sold shop fittings during the year with a carrying amount of £1,250. So £1,250. The income statement, we don't know what it is, but we can work it out in a minute. The balance carried down at the end of the year, that's in the beginning of the question. So shop fittings for the 31st of December is £14,360. So now we want to balance the account. So the debit side is totaling £18,240. The credit side must total the same amount. So our missing figure for income statement depreciation will be the £18,240. Take away the £1,250. Take away the £14,360. So our depreciation down on the income statement for shop fittings is going to be £2,630. So again, they asked me what it was, so I'll put it down at the bottom now. So £2,630. Now I've got profit, loss and disposal of shop fittings now. Now, they do not tell us the cost of what was sold or the accumulated depreciation of what was sold, but they do tell us the carrying amount. So this is a little schedule I put together to do a loss or profit on disposal of shop fittings. It's got the cost, accumulated depreciation, carrying amount, proceeds, and either the profit or loss on sale of shop fittings. So the carrying amount I'm going to get from the question. So I go back to the information. Shop fittings sold had a carrying amount of £1,250. Now, the proceeds is the amount of money we received when the shop fittings were sold. Now, that information is in the bank statement. So I'm going to be looking for the bank statement now. Money sold, we received for shop fittings. So here we go. So the shop fittings, £610. So we've received an amount which is less than the carrying amount. If the amount is less than the carrying amount, it's going to be a loss. If it's greater than the carrying amount, it'll be a profit. And the difference then is 1,250. Take away the 610, which gives us a loss then of £640. Now we come to the income statement. So Manford Trading as Sam's Trading income statement for the year ended 31st December 2016. So I've given out the template and we can work our way through the template. Do not worry about these percentages for the moment. I'll come to them in a few moments. Right, the revenue. I've got working number one. So I go down to my working number one for revenue. Now the revenue consists of two things. It's the cash takings banked. So you'll find them on the bank statement. So bank to the bank statement. And I've got £247,840. But we're also told in the information that the cash takers have not yet been processed on a bank statement. So I go to find them in the information. And here we go. Cash takers paid into the bank, but not yet credited of £1,220. If I combine them both together, then that'll be the revenue for the year. So I've got £249,060. So I'm going to put that into my income statement now. So £249,060. Now, cost of sales. Let's see what we can fit in here now. Opening inventory. Right, that's the information again at the beginning of the question. So opening inventory, we will have £32,170. Purchases, we worked it out in part A. So go back to part A for purchases. We have £184,750. Now we add the two together now, and we will get £216,920. Now we were told in a question that Samantha's taken goods for own use. So they're going to have to go underneath in a few moments. What they were, we don't know at the moment. We can calculate them in a minute. Right, closing inventory. Again, that's the amount at the end of the year. So that was given in the initial information in the question. So back to the top of the question. Closing inventory at the end of the year was £35,470. Now, we were told in the question, let's go back to the information. Samantha's pots have a markup on all goods sold of 40%. So you take your cost of sales. Your cost of sales is 100%. If you add on 40%, you get 140%. So that's what your revenue is. So if I want to work out my cost of sales now, I do a little calculation. So you take your revenue figure of £249,060 and you divide by 140%, which is the same as dividing by 1.4. That's a little calculation there. If I do the calculation now, it will give me my cost of sales figure. So it's 249,060 divided by 1.4. And I get £177,900. So now I'm going to do the gross profit. That's going to be your revenue of 249,060. Take away your cost of sales of £177,900 to give me £71,160. Now, I haven't done my goods for own use yet, so I'm going to go back and do that now. I'm going to work your way backwards now. So you had a number there, again, which you don't know what it was at the moment. You took away 35,470. You ended up with £177,900. So when I find that number, you do it backwards. You take 177,900, and then you add on the 35,470. And that's going to give us £213,370. Now, if there were no goods for own use, then that figure there would be the same as that figure there, but it's less. So the goods for own use then is going to be the 216,920, take away the 213,370, which gives us goods for own use of £3,550. Right, let's take that to the negative to make it easier to understand. So she's taken out £3,550 goods for own use. Now, we've got to remember we're going to use that later on in our statement of financial position because goods for own use goes onto drawings. So I've highlighted it there to remind us for later on what to do with it. So now we go into less expenses. There's no other income in this question. So my expenses. So the way I work them out is I go to my bank statement and I'll see what the first expense is. So going down here, the first expense is rent of shop premises. Now you'll remember we worked out the rent of shop premises figure for the income statement a little while ago. So let's find out the shop premises rent then. Here we had, it's £22,930. So in my income statement, I put down £22,930. Let's just check that, 22,930. There we go, yep. Back to the bank statement next. What's the next on the bank statement? General expenses, so another expense. So it's 25,170. So £25,170. Depreciation of shop fittings, we worked that out. Again, that was earlier a while ago. We got £2,630. Loss on disposal, again, we worked that out a few moments ago, and that was £640. So now we can total our expenses. And we get £51,370. So the final bit of the income statement, the profit for the year, is going to be the gross profit of £71,160. Take away your total expenses of £51,370 to give us £19,790. So that's our profit for the year in the income statement. Now the final part was part F, which was the statement of financial position for Sam's trading. So again, I've got down all of the template for us to save a bit of time. So we started with non-current assets. Now the shop fittings, it actually tells them the question what the carrying amount was at the end of the year. It was right at the very, very beginning. So again, I go back to the information in the question. It's £14,360, the figure at the 31st December 2016. Current assets. So we want to close the inventory first of all. The closing inventory again, we'll go right back to the beginning of the question. This will be the 31st December for inventory. We've got £35,470. Now the bank, we've got to be a bit careful on the bank now. So the bank, the balance in the bank on the bank statement was at the end of the year was £4,410. But in the information here, there are unpresented checks, central trade payables have not yet been processed. So we're going to take away £1,590. And then we've got to add on the amount just put it back in. So it's 4,410. Take away 1,590. And then we're going to add on the cash tax not yet banked of £1,220. That's going to be my workings out, which you'll see now on my statement of position. So it's the balance on the bank statement of 30th of December, less the unpresented checks, plus the cash not yet being credited. So we combine them together, we get the new bank figure. So it's 4,410, take away 1,590, plus 1,220. That gives us £4,040 in the bank account for our current assets section. And now combine the two together to get my total current assets. That's given me £39,510. Now let's count liabilities. Our trade payables, again, at the end of the year, we've got that in the information at the beginning of the question. So trade payables, the 31st of December I'm looking for. Here we have it, £16,830. Other payables, again, that's at the beginning of the question. That was to do with the rent. And here we have it. It is other payables, £1,230. Now I've totaled my current liabilities. And we end up with £18,060. Now, the net current assets, that's your current assets of £39,510. Take away your current liabilities of £18,060. That gives us £21,450. And net assets now is going to equal the non-current assets total, which is £14,360, plus the net current assets of £21,450, giving us a net assets of £35,810. Now, the final part of the statement of financial position is the finance by bit. So we've got capital. We'll start off with opening capital. Now, it hasn't told us in the question what the opening capital is, but we can do a little calculation. Your opening capital is your opening assets, take away your opening liabilities. Now, our opening assets we'll find in the beginning of the question. So the shop fittings, I go right to the top. So the 1st of January I'm looking for is £18,240. Infantry was another asset at the beginning of the year. So again, the initial information we had for infantry was £32,170. Then we had other receivables. So again, back to the beginning of the question. They were £860. So that's all of our assets at the beginning of the year. But the one that people miss out is the bank. For the bank, you go to the bank statement and you look for the balance at the beginning of the year for the bank statement. And here we have £1,270 at the 1st of January. So my total opening assets, if I add them all together, they come to, let me just do that once more again. The total will be £52,540. Our opening liabilities was only one, which was the trade payables. So again, back to the beginning of the question, I'm looking for trade payables on the 1st of January. 1st of January, trade payables are £14,560. As was the only one, the total for opening liabilities is £14,560. So the opening capital then is going to be opening assets of £52,540. The opening liabilities of £14,560 is going to give us a difference of £52,540. Take away £14,560, £37,980. So that's our opening capital. So let's put that now into our statement of financial position. So £37,980. Here we go, £37,980. The profit for the year, we worked that out in the income statement. So I go back to the income statement now. It's £19,790. Add those together now, and we get a total of £57,570. Now we come to drawings. Now the drawings, we go to the bank statement. There's information on the bank statement about drawings. So let's see the amount paid through the bank statement. We have £18,410. I've got to remember now, we've also got drawings of goods for own use, which were on the income statement, and they were £3,550. So £3,550. So we'll combine them together now. So I'm going to take away the drawings. So it's going to be 18,410. Take away another 3,550, which gives me £21,960. So the final figure now is going to be the £57,770 minus the £21,960, and it gives us £35,810. Now your net assets must agree with your final capital figure. That's basically your capital at the end of the year to make your balance sheet or statement of financial position balance. So I hope you found the video useful, and thank you very much for watching and listening. And take care then, and I'll speak to you next time. Bye-bye.